I would say people are feeling more confident. Uh, I would say compared to where they were a few months ago, partly because there's a feeling that interest rates have peaked and that at some point in the next several months they'll start coming down. As you know, the big debate is to come down now or next July. But so I feel that in general, people are more confident. And I think that's reflected in the stock market and stock prices.
Welcome to Wealthion. I'm Eric Chemi. There is so much in the news these days about energy, oil, natural gas, the green transition, electric vehicles, the geopolitical impact of what's happening with wars right now happening in the Europe and Middle East, and what does that mean for energy markets? And energy markets have a big impact on how much people can spend, right? What is that inflationary impact on the final wallet spend that people have? And what does that mean for the Fed? What does that mean for stock and bond markets? It's all interrelated. So today we're talking to the world's preeminent expert on the energy industry and the interrelations between countries and companies and geopolitics. I'm really pleased to be joined by Daniel Yergin. Dan, thanks so much for being on the show with me. Your bio is impressive, right? You wrote the Pulitzer Prize winning book called The Prize. It was The History of Oil. Your latest book from a couple years ago is The New Map. And in it, you said, if you're going to look for a hot spot in the world, look at Ukraine. That's exactly what happened. You were very prescient in your analysis of what's happening. And you're the vice chairman of S&P Global, the acquiring company of what you started with Cambridge Energy Research Associates many years ago that became, I guess it was IHS Markit. Now it's S&P Global. So you've seen it all. I feel like you know everybody, right? You've met Putin. You've met every CEO of an oil company. You've met every person that matters in the energy industry. You've met them. You know them. So I really appreciate you taking time to spend with us today.
Well, thank you, Eric. I'm very glad to be with you. And thank you for that very gracious welcome.
What is the biggest concern right now? Is it the Israel-Gaza war, or is it the Ukraine-Russia war, or is there some other third issue? Is it the Venezuela-Guyana thing that all of a sudden has happened in the last few days? When you're talking to the people that make policy around the world or invest, the executives, the Exxon types, the Chevron types, and they're figuring out where to put their money, what are they most worried about at the moment today?
I think you could summarize it all in one phrase, which is geopolitical risk. And all of those things you've mentioned fall under them. Business likes predictability. Business likes to be able to make investments and know how they're going to turn out. But geopolitics seems to just be dominating the conversations right now, and for good reason.
Has it gotten worse? Because when you write the prize, you write the new map. We've had geopolitical issues from day one, right? This is a human thing. It doesn't go away. But is it all of a sudden in this decade worse now than it was in the 70s, 80s, or 90s?
Well, I think it's changed. It is true that I remember in the prize, somebody said in the 1930s in Europe, oil was 90% of oil was politics. But I think what's happened, and this is what I really focused on, one of the things in the new map, is that we've had this era of globalization, which was about 30 years. Started with the collapse of the Soviet Union, and then later with China entering the World Trade Organization, what I call the WTO, the World Trade Organization consensus, the globalization consensus. And you had conflicts and everything, but the sense was that all these countries were benefiting. And that era is now over. And we're in an era where suddenly supply chains, which used to be something that just supply chain managers worried about, now boards of directors worried about. So we've gone from that era in which the leadership of the U.S. was pretty assured to one of great power competition between the U.S. and China. And this kind of now Russia has really become a dependency of China.
Really, so you would describe Russia as a dependency of China in the same way we think of North Korea as a dependency of China, or the way that we thought of Cuba was a dependency of Russia decades ago.
Yeah. Well, yeah, because it's when the Cold War ended and the Soviet Union disappeared, the real drive was to integrate, have Russia, which has nuclear weapons, a lot of nuclear weapons, integrated into the global economy, the global political system, its economy increasingly integrated with Europe. But Putin made that, he was already going in another direction, but when he made his decision to invade Ukraine, he overturned that bargain, that relationship. the door to Europe is slammed shut, which is Russia's natural market. And so Russia really is now very important to China in its competition with the United States. But for Russia, its real economic future is with China. And, people will say in the stores, Western goods have disappeared from the shelves in Russia and they're replaced by Chinese goods.
All this integration, right? It's been such a controversial topic over the last several decades. Will bad actors behave better if they're integrated, or do bad actors now have more leverage on you because you've integrated with them? Would we have been better off, let's say from an American point of view, would we have been better off never integrating with Russia, never integrating with China, and saying you're on your own and we can do this without you?
Well, I think with Russia, we really had no choice because of the nuclear weapons. And it made sense. And it seemed for a couple of decades that that was what was happening and that, Russians, had broken out of be outside the Iron Curtain and they were integrated into the global community. You had Russians studying in the United States, Americans studying in Russia, growing commerce. But sign of the times is like the U.S.-Russian Business Council, which promoted Western companies, U.S. companies in Russia, has now closed down. So, and with China, I think what was not understood was how integrated our economies had become in so many ways that people don't think about. I mean, a lot of people who are listening to this and watching this show probably take a vitamin C pill or have in their multivitamin their vitamin C. Highly likelihood that what's called the active pharmaceutical ingredient of vitamin C, that comes from China. So there's so many ways we're connected, in so many ways they're connected, but we are going through a period at least of fragmenting globalization. And we're finding out it's difficult because we're more connected than we thought we were.
Difficult is quite an understatement
Yeah.
when you put it that way. What are the conversations that you're having these days? So geopolitical risk seems to be the number one issue. What else are the topics when you're talking to either heads of state, policymakers in different countries, or energy executives? Other than geopolitical risk, what are they focused on? What are they worried about?
Well, I think they're worried about domestic political risks. They're worried that the bargain that they made to make an investment, that the government changes or policy changes. I find that both around the world and, of course, in the United States, people are very interested in understanding the ramifications of the Inflation Reduction Act. Indeed, I'm doing a presentation next week, not next year, soon it'll be next week to a company on that, because the U.S., which used to tell other countries don't have industrial policy, now has what's called industrial policy, i.e. very direct investment and involvement in the economy in a way that we didn't in the past. And we're talking not about hundreds of billions of dollars, but potentially trillions of dollars. And so there are risks there, but there are a lot of incentives for companies to figure out if they invest in the right thing. So I find around the world, people are very interested in understanding these policies that have come out of the Biden administration.
And this is a crazy topic, but you mentioned the Biden administration, the policy they've put in place, very different than what we saw in the Trump administration. And, Jared Kushner's got this book out now and he talks about, look, if we were still in charge, if the Trump administration was still in charge, we wouldn't have had these wars. There would not be Israel and Gaza. There would not have been Russia and Ukraine because we had a better handle on what was happening because we understood these dynamics better. Do you agree with that statement, with that sentiment?
Well, I think, I don't know, I'd have to think about that. What the Trump administration did get done was the Abraham Accords, which was diplomatic relations between the United Arab Emirates and Israel and a couple of other key Arab countries. That momentum was continuing because it looked until the Gaza war began, until Hamas invaded Israel, that Israel and Saudi Arabia would have diplomatic relations, which would be a huge turnaround. But in some ways, there's also been continuity. A lot of the policies and tariffs and so forth related to China that were introduced by the Trump administration have continued. So I think the one thing, if you're here in Washington where I am, you'll find that there's not a lot that unites Democrats and Republicans, but one thing that certainly does is this kind of sense that China is a competitor or an adversary. And that affects the policies. And that's where you have some continuity from one administration to another.
How do they deal with China? Because we do so much business with them, but then we treat them so poorly in a way, in the sense of we don't trust them. It's a bipartisan agreement of they're the bad guys, but we still do business with them. But we're not sure if we should ban TikTok. We're not sure how to deal with them, and we want this energy transition, but they control all the minerals. If we're going to switch over to all electric vehicles, we actually are better off in a world where we control oil-based, fossil fuel-based resources. But when you start switching to electric vehicles, it's going to be all now Chinese
Yeah.
dependence. How do they deal with this?
Well,
This is a
there are a couple of different parts of your question. First, that issue of trust is very basic, and I think for a couple of decades there was trust that the U.S. and China were were both part of the same game of a global economy and benefiting from it. And certainly, there's high distrust in the United States. Concerned about China's continuing military growth, concerned about the South China Sea, which I write about in the new map. People focus on Taiwan, but you got to keep in mind the South China Sea, which China claims as its own, and about a third of world trade passes through it. But I was just yesterday in contact with a colleague who was coming back from China, and he said Chinese had said to him very similar thing, that we don't trust the United States anymore. So that's a two-way street, and a lot of effort is made here in the U.S. trying to figure out what are Xi Jinping's intentions, what does he intend to do. Uh, but I think then you raise the question of minerals, and it's true that if to move to this world of what's called net zero, reducing emissions, means creating new supply chains, and it means. I mean, the phrase I use in the new map is you move from big oil to big shovels, because you're going to need a lot of mining. And China has a predominant position in mining around the world, and a very predominant position in processing those minerals, sometimes 70 or 80%. About 80% of the solar panels come from China. Maybe 80% of the lithium ion batteries for electric cars come from China right now. And that's one of the things that the Inflation Reduction Act it intends to change. But then this third part of what you said really goes to where the U.S. is predominant, which, not so many years ago, the U.S. was the largest importer of oil in the world. Now it's the largest producer of oil in the world. It's a major exporter of oil in the world. The U.S. was going to import lots of natural gas in the form of what's called LNG, liquefied natural gas. Now the U.S. is the largest exporter of natural gas. So the U.S. has a very, it produces a lot more oil than Saudi Arabia or Russia. So in that sense, I think that third part of your observation is very important, is that this is where the U.S. is strong and China isn't. It imports 75% of its oil, and half of its oil comes through the Strait of Hormuz. We don't depend upon the Strait of Hormuz, which is that passageway from the Persian Gulf to the Indian Ocean.
So why are we doing this? Why as a country are we forcing ourselves to do an energy transition that hurts our self-reliance, our self-dependence, independence, and puts us more, in desperate need of what China has to offer? Why do we do that
Well, it's obviously it's the climate agenda that drives it, and Trump backed away from the climate agenda. When Biden came in, the first thing he did was establish that we're going to rejoin the climate agreement. And there was just this huge conference in Dubai for what's called COP28, which is a UN climate conference. 100,000 people showed up for it. So it's basically on climate. Is the other factor, though, is also competing with China, trying to bring certain kind of manufacturing back to the United States, particularly concerned about semiconductors, not only from China, but from Taiwan, where we're highly dependent. And so that's some of this big industrial policy, like the CHIPS Act, to fabricate computer chips in the United States, because that business was being done overseas because it was cheaper and they had scale.
I know, I told you before, and I said, I'm not going to ask you investment questions or investment ideas, but do you look at certain areas, certain countries or sectors and see opportunity, right? Obviously working at S&P Global, a lot of it goes back to, okay, what's the data say, or where are opportunities? So I don't mean to say, give me a stock or give me a pick, but are there certain areas where you feel you're optimistic that this nation gets it, or this industry is going to figure things out, that if you had to just pick a sort of a big picture macro trend, where do you see more positivity?
Well, I think 3 years ago, everybody should put all their money into artificial intelligence, AI. And I mean, again, I'm not an investment advisor, a stock picker, but look at where all the strength is in the, in fact, in the S&P, which is one of the indices that our company does. But these things go in cycle. Oil was very out of favor, and then it came back in favor, uh, uh, and then it's a cyclical industry. So I have to think. Probably Eric would need to give some thought to what industries ultimately are not cyclical, because as the famous saying goes, "Trees don't grow to heaven." But right now everybody's crowding into tech. I think just so much depends on actually what happens to the economy. And the general sense, if we pick today's date, is that, people say, oh, it's going to be a soft landing, inflation's coming down faster. But some of the banks and some of the analysts still think they see a recession in the second half of the year. So I'm just struck by, forecasting, that famous phrase attributed to Yogi Berra. I don't know if it's true, but to him, but avoid prophecy, especially about the future. And it certainly holds true. At the beginning of 2023, people thought U.S. oil production, would grow, but at a very low level. And I know we came out with a number that said higher, and people said, "Oh, you're off consensus," and it turned out to be even higher than that. And so, look at how people missed their inflation forecast going up and apparently now going down.
The forecasts are never right.
Right.
It's I remember one year, this was probably around the 07, 08, 09 blow up, and there was some survey at the end of a year of investment professionals, and they said, okay, what do you think the market's going to be? Like, that's called S&P 500. What do you think it'll be for the next year? And they give these, 5 choices, A through E. And I think the choices were, -5% to -10, or 0 to -5, and 0 to +5, 5 to 10, 10 to 15, like these little narrow gaps, right? And I think that year was like -40, something.
Right.
It was just not even in the range of choices. So you're right about the forecast. We've had people come on the show. Some really see a hard landing ahead. They don't believe the soft landing at all. They don't believe the forecast. They look at a lot of things that are starting to break down. I'm curious, when, let's say you talk to a CEO who has to decide, are we going to invest more in energy? Are we going to do a big capital spend, big infrastructure project? They're looking at inflation. They're looking at growth. They're looking at demands. They're looking at jobs. But their decisions are also going to affect what happens, right? If every company pulls back and says, we're not going to invest, that itself could create a recession or a hard landing.
Right.
So what are you seeing in those conversations? Do they feel optimistic, or do they feel pessimistic because they don't trust the data?
I think I would say people are feeling more confident. Uh, I would say compared to where they were a few months ago, partly because there's a feeling that interest rates have peaked, and that at some point in the next several months they'll start coming down. As you know, the big debate is to come down now or next July. But so I feel that in general people are more confident. And I think that's reflected in the stock market and stock prices as well.
Walk me through how interest rates affect the energy industry in terms of when we're at 5% rather than 0%. What does that do for the likelihood of new projects being built, growth from the
Well,
companies?
what it's really hit is renewable energy. And it's
Okay.
really hit things like offshore wind, where you see all these projects that were going to be built along the East Coast, huge multi-billion-dollar projects being postponed, delayed, maybe even canceled, because these capital-intensive projects, they're afflicted by high interest rates, they're afflicted by inflation, and they're afflicted by supply chain problems. So, if you look at the stock of an offshore wind company, it really went up and then it's gone down considerably. And you see headlines in the Financial Times, crisis in offshore wind. So they have, I'd say a lot of renewable projects have been very affected negatively by high interest rates. Um, so, and then the question, very often when you go on business television, the last question is, tell me about oil prices, what's going to happen to them. And my answer is, well, tell me what's going to happen to GDP, because that will really affect it. Right now, what we see is an imbalance in the market, in the sense while demand is growing, what's really been the surprise is, call it the strength of the Western Hemisphere, which is oil production growing in the United States by a lot this year. US by far and away the biggest oil producer in the world. Canada, Brazil, and Guyana, small country on the northern coast of South America, where big oil development is coming. And so basically, right now, supply is outdistancing demand, and that's reflected in the oil price being down a lot. I mean, one of the things that really struck me when Hamas invaded Israel and launched the war, normally you have a war in the Middle East and oil prices go up. In this case, they went down. And I think, although it's not well recognized, the growth of shale oil in the United States has been a real stabilizer to the oil market, avoiding the kind of panic that you would have in uncertainty. And similarly, the story that's less well known even than oil is natural gas, again, what we call liquefied natural gas. The US only started exporting in 2016. It's now the world's largest exporter. 40% of Europe's LNG imports come from the United States. So Putin probably would have gotten his way in using the gas weapon, because he cut off natural gas supplies to Europe in order to shatter the coalition supporting Ukraine. But what he didn't count on was this LNG, including a lot of it from the United States, would come in and replace Russian gas. So it shows the geopolitical impact of the oil and gas development in the United States, which a lot of people in this country don't recognize. But when I go to other countries, they sure do recognize it, and they're grateful for it.
Yeah, it's like we don't even realize, the average American doesn't even realize the strengths that we have here with what's the resources here. We're in December, the winter's coming. It's going to be another cold. Winter's cold, right? Like that's the definition of winter. We saw Europe struggle a little bit with it, but they got through it in terms of, okay, you don't have the same energy resources from Russia. The war is still continuing. It'll continue through this winter. What do you foresee in terms of heating oil, natural gas? And what do you see in terms of them being able to stay warm?
It's natural gas in Europe. I mean, it was tough for Europe. I mean, prices really did go up, and it was even tougher for developing countries, which were not able to get LNG because that LNG was going to fill the gap in Russia. So, if you're in Europe, in Germany, they worry about being deindustrialized because of the cost of energy. Their cost of energy are much higher, including their cost of electricity are much higher than the United States because of the way they've structured things around renewable energy and driving. Germany shut down its nuclear power, which was 25% of its electricity, on environmental grounds. So I think that, Europe is in a better position this year than it was last year because it built up supplies of gas in storage. But you know what? People are going to still be looking at the thermometer very carefully. It's going to be a lot easier if it's a mild winter. If it's a cold winter, it will still be challenging.
You mentioned Germany shutting down their nuclear plants, right? Climate agenda, we're going to move in this direction, but now our electricity prices are higher than they would have been. We don't have as much energy. Are you afraid of those types of mistakes happening in America because a certain group of people get their way and all of a sudden we're just voluntarily turning off power that we had no problem being able to deliver?
I think that's a very real concern, that our electric supply system will be tighter. We won't have the transmission. I was with a group of electric power executives a couple of months ago. It was really striking to me. In the past, they were always focused on demand for electricity going down because we were going to have more efficient refrigerators and different policies. Now they're seeing demand's going to go up because of electric vehicles, EVs, and going to go up because of all the electricity demands for artificial intelligence, computing power, server farms for computers. And they're now sort of focused on, well, how do we meet that demand? Where do we grow it? Particularly if this problem we have in the United States, which is you can't get permits to get things done. You can't get permits to build things, whether you're talking about a natural gas pipeline, whether you're talking about a new mine. So you not as dependent on the Chinese supply system and foreign sources or transmission lines. And we have this thing in the United States called the Interstate Highway System, which President Eisenhower did in 1956, launched. I don't think you could build it today because you wouldn't be able to get the permits. You'd be in court. In fact, I was talking to an executive of one of the big renewable wind developers in the United States, and he was saying, I think we've been trying to get a project approved since 2007. He said, I think we should hire as our staff now people who are in the 8th grade, because by the time they finish their careers, we'll finally have these things approved. So that is, I guess if you go back to what are business executives worried about, they're worried about the effectiveness of government, of the machinery of government working properly. And we see that in Washington too.
Is that one party or the other that's causing more of the problem on these permits, or is it everybody?
Well, I think it's everybody because it's across the spectrum. Obviously, some part, there are not a lot of Democrats who are in favor of natural gas pipelines. There are a lot of Republicans, but it's because the permitting process is so complicated. You have so many different agencies involved. And then even if you get a permit, you have another 7 years of litigation that goes on to this federal appeals court and that federal appeals court. I was talking to a woman who's in charge of a major mining project in the West, and they keep waiting to hear from, I think it's the Ninth Circuit on a case, which is the court out in the far West. And they just keep waiting. And, everything takes longer. One of the things about the Inflation Reduction Act, and in general, is that, we need more mines. It takes, if everything goes well, it takes about 20 years to bring a new mine on. So if you started, if Eric Mining Company decided to spend $1 billion on a mine this year, or let's say 2024, by 2044, you might have it ready to produce something. So a lot of political cycles you would go through.
That's a good point about hiring 8th graders. And these, you're right, these timeframes are now measured in like 15, 20 years plus. So you wonder, well, who's even going to have the patience, have the capital to do this, right? Is this a massive, I have a friend that works at Blackstone, and he works on their energy business, and they're doing these deals, and these deals take 15, 20 years. So in order to get a profit on this, right, to even get $1 back of revenue, who even has the length of time ability in terms of patience and capital and effort to get these done? Very few and far between.
I think so. I mean, you do have these energy transition funds, which have raised a lot of money, but then you get into permitting, and it also will turn out that, I saw some number that over 600 localities in the U.S. have voted against they don't want a wind turbine farm there. So that's why offshore wind looks so attractive, except it turns out to be a lot more expensive than you thought. So it does take patience. And, this morning, I was talking with an executive from a mining company that has had all their contracts, permits with the government to develop a new mine. Then the government changed and they took the permits back, and they've spent, 3 or 4 years and a lot of money just trying to prepare to get ready to do that. Just to apply for a permit, to getting your permits to do a LNG export facility, just getting that done can cost you $100 million.
When you think about all this, it suggests that prices will keep going up because demand will go up, but supply is not going to go up, right? Is that just a fair basic assumption, given how difficult supply is?
Well, I think short term, we've seen prices down because of demand being weaker than thought. And, commodity prices like copper is the metal electrification. And a lot of this energy transition is about electrifying everything. But demand is down partly because demand is down in China. So I think longer term, if you're going to get these goals, the climate goals that are out there, we did a study at S&P that said you'd have to double copper production by the middle 2030s. But then that gets back to it takes 20 years to develop a mine. So I think there's some crunch points coming. We're not seeing them now because demand is weaker than the thought and the supply is there. But if you get back into a period of strong growth, that's when you'll start to see the pressures. And that's when you'll start to see spiking going up and feeding into inflation again.
And you're right, it's not U.S. demand. It's global demand. It's Chinese demand. These commodities move on global demand, not domestic.
Exactly. And China I mean, half the world's copper was being absorbed in China because you had 20 million people every year moving from the countryside to the city. And that all took a lot of copper to do that. So, yeah, we do have to remember the commodity markets. The U.S. is only a part of it. And that while the U.S. is a very large economy, uh, there's the rest of the world as well.
You talk about something that when the permitting process, it reminds me of a few conversations I've had where people talk about Europe is like a museum now. They don't want innovation, they don't want change, they want everything to be the same. Are we getting to that point in America? This was a European who said all great innovators have to leave Europe to come to America. It's the only place you can innovate. But when you say it takes decades to get a mine up, are we turning into a museum here too?
I don't think so yet. I think the permitting is a big problem, but I certainly see, European companies that, resource companies that were looking to Russia are now saying they're refocusing their business on the United States. And in fact, whatever whether you're left or right, if you're a company and you see the kind of incentives the U.S. government is getting, if you can get through the process and get them, it makes it attractive to come here and invest. So I think, in fact, I think when I'm in Europe, I certainly hear people talk about deindustrialization, and 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 China is not the attractive place to invest that it was 5 years ago. People are kind of backing out of China and either trying to shift their supply chains to Vietnam or India. But I think in a world, the U.S. compared to a lot of other places, is still a much more attractive place to invest, and it's still much more hospitable to innovators and risk takers than Europe. So I think it is, Europe does have that problem about being stagnant.
One of the investment advisors that we interviewed recently, they said, I'm out of China and I'm out of Europe, right? Like I can do a lot of investing in the United States and Japan and other countries, but Europe and China, for a lot of the reasons that you said,
I
I don't
think
see
that's
that
so true.
opportunity.
And I was in a meeting listening to an investment committee of a foundation talking. And the big thing they were talking about is how do we get out of our investments in China? So, and Xi Jinping, who's been pretty aggressive towards the United States, the president of China, he came to the APEC meeting in San Francisco, the big Pacific meeting where he met Biden, but he made a point to have dinner with all those CEOs because he's trying to say China's open for business. But I think the general predilection is exactly what that guy said. You got to reduce your exposure to China, even though it's a growth market and it's 1.4 billion people. And Europe, if you're looking, it's just, if it's hard to do business in some ways in the United States, it's harder in Europe.
Yeah, I guess that's the selling point for the US, right? It's like, oh, you think this is hard? Try somebody else, right?
Yeah.
What's going on in Guyana right now? Venezuela, Guyana. This feels like it's, if you're not paying attention, it feels like something has just happened, right? Oh, are they taking over? Are they not? They're a very fresh story, but I'm sure for someone like you, this has been bubbling up for a while, or anyone who's in the know,
Well,
they've been paying attention to this.
well, Guyana, just to help our viewers and listeners know, is that, as I mentioned before, is a small country on the northern coast of South America. And nobody thought there was oil there, but Exxon and Hess Energy discovered what turned out to be significant resources. And so it's being developed very fast, and it's very attractive, and it's considered stable. Except next door, you have Venezuela, which has ruined its economy, is basically a colony of China, not of China, of Cuba, and very close relations with Russia and Iran. And President Maduro, so-called president, he's a dictator, suddenly, announces we're going to have a referendum that 2/3 of Guyana, including its offshore, belong to Venezuela, going back to a boundary dispute that was settled in 1899. 1899, and 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 it was just it's kind of come out of the blue, and it's thought he's doing it for domestic reasons because his economy is terrible, and as much as they've imprisoned the opposition, there is an opposition. But I think, and it hasn't been really remarked, Venezuela has close relations with Iran and with Russia. And frankly, we see Iranian-linked militia in Iraq and Syria firing on U.S. troops. A week ago, it was up to 70 different times. Uh, oil prices are low. The U.S. is stretched thin. Why not create another crisis on the in the Caribbean? And so I was very I, I'm not convinced that this is just coming from Venezuela. I think it's kind of well timed, given other things that are happening in the world. And people have said it's just rhetoric, but he may do something reckless. And the U.S. has increased its overflights over Guyana and affirmed its commitment to it. So it may seem most people have never heard of Guyana, but I think it's a very important new element in the global energy scene, and it's Western Hemisphere, and so it should be secure. Except your neighbor is this dictatorship and this dictator who's ruined the economy of what was once Venezuela was once the richest country in Latin America.
Does all this to you look like a World War III that is starting? Right, you got the Ukraine, Russia, Israel, Hamas, Venezuela. They all have ties to Iran. Like it's all the same countries at
Well,
the core of this.
I don't want to say anything inflammatory. It's funny because a U.S. military person asked me the same question about a week ago. I mean, it is. I think we do have to be very careful in this period, and in particular, in I think Maduro doing what he's doing in Guyana is it's a Putin playbook. I don't like the settlement that was once made. I'm going to change it. But I think we do managing relationship with China is certainly the number one geopolitical task for the United States in this century, particularly as the term that now gets applied to China that it's a near competitor or a peer competitor. So I wouldn't go as far as her statement said, but one of the things I tried to point out in the new map, I mean, there are two things to call people's attention to. One is, well, there are many things, but one is the degree to which we don't want to find ourselves in a pre-World War I situation. And two, I really want people to look at it and read it, the sections on energy transition, to realize that this thing called the energy transition that people are talking about and implementing now is totally different from any energy and transition that we've had before. So I think, I think those are two of the big takeaways. And, even late Henry Kissinger, sort of talked about analogies to pre-World War I right now. But then, of course, I remember, and I think I quote him in the new map, he said, but analogies are imperfect. But I think we have to be careful. But you know what? The Chinese have to be careful too.
I like the way you put it. We'll leave it there. That's a good ominous way of leaving it. They have to be careful too. Dan Yergin. So of course the book, the most recent one is The New Map. I loved it. People should definitely read it because it's everything that's happening right now. You spell it out, and geez, the prize is so key. If you want to figure out how we got to this point over the last 150 years with oil and Shattered Peace. Was that the name of the original book? Did I get that
was
right?
that was on the origins of the Cold War, and
the breakdown, right? The breakdown of what happened after with the Berlin Wall and everything.
And the funny thing, when I was writing the new map, I started to think I never thought I would be writing another book about the origins of the Cold War, but that's a new Cold War. But that's kind of how I started to feel as I was writing the new map. But let me emphasize one thing: I'm an optimist.
It's like somebody said recently, things have been worse than they are now, and they always got better. So for as bad as people think something is today, like things have been worse and they got better, and we're not even that bad.
Right. And one final thing to say, markets are always interesting and they're always changing.
Right. No, it's like you're right. If you write books long enough, all of a sudden you start writing about the next Cold War, right?
Right. And I never, as I said, I never expected, I had all my old archives from the first book and I thought, well, wait, this is beginning to sound familiar.
Exactly. Yeah, exactly. Right. The first book to the most recent, it's like, oh, now we're repeating themes. Dan, this is so good. Thank you for spending time with me today. I know you were waiting for that water cooler to arrive and it did not come during our interview. So that worked out really well. Right. Anyone. Yeah. So please find The New Map by Daniel Yergin. It's a great read. It'll be very informative. It certainly was for me as well. And thank you all for watching, for listening, for checking this out. If you like this episode, please like it, share it, subscribe to the channels, let people know. That's how more people get a chance to enjoy the content as well. And remember, every Friday at 11 a.m., our new show with Anthony Scaramucci, Speak Up with Anthony Scaramucci. If you've got questions for him, that's a live call-in show or email submissions. There's a lot of ways to get questions asked. Wealthion.com/ask Anthony. Also at wealthion.com, if you need to talk to an investment professional, you can't figure out what to do with your finances, you heard a lot of things today that make you uncertain, it's free, quick form, no commitment. These are investment professionals that we endorse. It's a free public service. You can just talk with them, have a conversation, see if they're right for you. So thanks again for watching. I'm Eric Chemi. We'll see you next time here on Wealthion.